Morning. Let's see if this is working. All right. Okay. My name is Gui Gomes. I'm the founder and CEO of OranjeBTC out of Brazil. We just heard a little bit about what MetaPlanet is building in Japan, and I'll share a little bit about what we're building in Latin America. I think it's clear that Bitcoin is global and adoption is spreading around the world, but adoption is still uneven, and that creates a lot of opportunity. I'm trying to say here is that when you take a look about what happened in the US over the past few years, is mind-blowing. Bitcoin has deeply integrated into US capital markets. From strategy, block, Coinbase, we have over 50 public companies that give you access to Bitcoin and digital assets. On top of that, we have asset managers, we have banks that have fully embraced Bitcoin. I bid the most successful product in the history of Wall Street. So that's quite mind-blowing for anyone following this industry for a few years. And all of that was built on a booming private sector with a lot of successful companies building solutions around Bitcoin. And of course, there's the community, Bitcoin Twitter, that is following the industry, sharing insights, and helping adoption. That combination is quite special, but to some perspective, it's kind of unique to the United States. When you go to Latin America, adoption is real, undeniable. We've seen 67% year-over-year growth on on-chain volume. Almost $1.5 trillion has been circulating in that economy on-chain. When you see year-over-year, it's actually accelerating at a CAGR of 60%, the amount of capital flowing through digital assets. Of course, Bitcoin is part of that. Stablecoins are also a big piece of that story. And I'm happy to say that Brazil is leading the way. Almost 77% of that volume is coming out of Brazil. We have about 25 million Brazilians holding Bitcoin and other digital assets. So adoption is undeniable, grassroots, but mainly on the retail side. When you go to the institutional side, it's quite an opposite story, especially when compared to the US. We have no public miner, no public exchange, no real big banks embracing Bitcoin as of yet. And that creates a big opportunity. And one could argue, is that because we're talking about a small economy and a small country? It's quite the opposite. Brazil is always ranking among the 10 largest economies around the globe, a $2.3 trillion GDP, 215 million people, most of them live in urban areas with full access to the internet. And we also have the largest capital markets in Latin America, much smaller than the US, but it's still sizable at around $1 trillion in total equity and something around $60 to $7 billion in new issuances every single year. On top of that, it's a quite sophisticated market because this is a market facing inflation and currency debasement for essentially 3 or 4 decades. This chart here shows how much the BRL, the local currency, has lost in value against the dollar since 2012, almost 70%. And we all know what happened to the dollar during the same period. So Bitcoin is not an alternative, it's a structural need. Brazil has had savings, frozen savings account, almost 6 different currencies over the past few years, and has lost close to 82% of its value against the US dollar. As I like to say, if you think Bitcoin is good for America, Bitcoin is structural for Latin America. So we're talking about a large economy that has a structural need with grassroots adoption, but the institutional adoption is still not there. All the conditions were in place. We needed a local champion. And that's why we started OranjeBTC last year to be a public champion for Bitcoin in Latin America. Our mission is quite simple. Our goal is to accelerate Bitcoin adoption in Brazil and Latin America. We want to spread the Bitcoin standard in the region. To do so, we had to be big, we had to be meaningful, and we have accumulated 3,722 Bitcoin. We're the largest holder in Latin America, the largest holder in the global south, and we rank, as of today, number 25 of public companies holding Bitcoin around the globe. That's a pretty big number for Brazil. But our mission is to grow Bitcoin per share. That's what people like the most. So we designed the entire company with that mindset. We built a capital structure that is very clean, equity focused, no warrants, little debt. Even with the recent market correction, our debt ratio as of today remains around 9%. On top of that, we had to think about how to expand the balance sheet. We all know what Strategy and other US-based companies have done with the ATM. ATMs do not exist in Brazil. What is there is shares in Treasury. So we build shares in Treasury that allow us to sell them into the open market, capitalize the company, and buy more Bitcoin, and have done so over the past few months. We can also buy back shares if we're trading below MNAV, and we've done that in the past few weeks when the market was under pressure. And that allowed us to grow our Bitcoin per share over the past few months. We have been around for around 4 months, so very early stage, but we've done about 2.5% so far. On top of that, we're trying to change corporate governance in the region, being fully transparent with all the metrics in the dashboard, as many other companies in the space, and also proof of reserves, so anyone can audit our coins on chain. And how do we think about the company? The treasury is at the center of the business. Our mandate is to grow Bitcoin per share. But we think about the company in 3 different pillars. We have principal investments, we have education and marketing, and we have financial products and access. And I'll share a little bit more about each one of those segments. Principal investments, we just heard from Simon on Meta Planet. They have the Bitcoin income generation. We're thinking in a kind of similar way. We want to use the strength of our balance sheet to generate returns, to cover all of our operating costs, have profitability to buy more Bitcoin. Our intent is to be profitable by end of year, and I'm happy to say we have made good progress in that direction. We have a very strict mandate, very specific rules of how we think about it, extremely conservative, but we see a lot of opportunities to use the strength of the balance sheet to generate returns to shareholders. And I'll not share much of what we're up to, but I'm happy to share that we are the first public company around the globe to have Stretch as part of our corporate strategy. Strategy has been the first company. Strategy has been the first company to adopt Bitcoin as a corporate strategy, and we have now adopted digital credit as part of a corporate strategy as well. And that's one of the examples of how we're monetizing to generate returns for the shareholders. We have a decent position right now, and our goal is to get to about $1 million in Stretch exposure over the upcoming weeks, and being the first public company doing so and helping to spread adoption around the globe. So buying Bitcoin, adopting this ecosystem, adopting these new solutions is one way to drive adoption, but education is our mission. And we're doing a lot on that front. We have launched our blog, which brings best-in-class content from the US and around the globe to Brazil in both Portuguese and English, having thousands of visits every single week. We have done our first corporate event. It was the first institutional event in the history of the country about Bitcoin. And we gather about 500 investors, bankers, and asset managers to talk about Bitcoin and Bitcoin corporate strategy. And we are honored to have Saylor joining us to share a little bit about his journey. We also have built a meaningful online presence. We're using a lot of AI. We launched our first AI-generated video about the history of money, and thousands of Brazilians have learned about what's going on around the world. And we have content every single week about Bitcoin and what's going on around the economy. And on top of it all, we have just added a new toolkit to our platform, and we took over bitcoin.com.br, the most prime digital real estate in Brazil around Bitcoin. And we're going to turn that into a hub, starting with content and education, and eventually growing that into a platform with products and services around Bitcoin and this new ecosystem. But it's not only about buying Bitcoin, growing Bitcoin per share, spreading the word, and driving education and adoption. We need to build access. We need to bring new solutions and new offerings to the local market. And that's what we're up to. Over the upcoming years, we're going to bring new solutions helping to drive adoption. We start with capital advisory, helping local companies to understand Bitcoin and add Bitcoin to their balance sheet. We're doing the opposite as well. We're helping a lot of global companies who want to build a presence in Latin America to penetrate the region and understand the best way do business there. Asset management, as I mentioned, we have many US players bringing a variety of solutions around Bitcoin, and we want to do the same. We're going to bring new ways for local investors, both institutions and retail, to get exposure to Bitcoin through different products and solutions. And in credit, you cannot get a Bitcoin-backed loan in Brazil issued by a local company as of today. We hope to solve for that in the upcoming years using the strength of our balance sheet and our local presence. And the remaining question is that resonating? We're a pretty young company, but when we were raising capital last year, many investors were asking, is there a local demand? Are you guys be able to actually grow your shareholder count? And I'm glad to say that, although very early, it's looking pretty good. We became a listed company on October 7th, all-time high day. Bitcoin has gone down 50% ever since. And in the meantime, we grew our shareholder count by 44x, going from 150 shareholders to essentially 8,000 shareholders in fewer than 100 trading days. With that, we brought liquidity. We're among the most liquid stocks in the local stock exchange. We're in about 25% top percentile, number 87 per turnover, and that was done without an IPO, through a direct listing with no distribution. Liquidity is growing because the local market has a demand to get exposure to Bitcoin and digital equity, which was not there before. And now we have some wind on our sails as well. As we all know, emerging markets were kind of put aside over the past few years, given how booming was the US economy and US tech. But now we're seeing capital rotation. We're seeing a lot of capital flowing from developed markets to emerging markets. And Wall Street is kind of very bullish in Brazil and Latin America. So we believe that capital flow will not only help the region increase the size of the local market, but also help OranjeBTC to keep growing. As of today, the only company listed in Latin America that is a native Bitcoin company that gives you exposure to not only Bitcoin, but emerging markets is OranjeBTC. And that's a key differentiator for anyone trying to grow exposure in the region. So as I mentioned, Brazil had all the conditions: a sizable market, a structural need, a grassroots adoption cycle, but it lacked a champion. And that's what we're up to. We want to have the champion of the region, help to drive adoption in the global south, and get Bitcoin on the hands of millions of people. Thank you so much.